Hey guys, and welcome to the first segment, the first session, based on this paper. I will be doing a number of papers or number of facts, and then I'll combine them later on. But for now, I'll be discussing in detail the first 15 questions based on June 2023. As time, as I have more time, I will be taking you through the other papers as well. So let's start with question 1. Let me ensure that this thing is showing. Yeah. So we have here the total credit of the bank column of a three-column cash book is greater than the total debit. The most likely reason for this situation is that, so firstly we're looking at the bank column of a cash book, and they're saying that the total credit side is more than the total debit side. So remember the bank as in your, it's a current asset, and current assets are supposed to have debit values, but in this case it has a credit value. So when we're dealing with bank and the bank is supposed to have a debit but it has a credit, it means that we owe the bank money. And when you owe the bank money in this case, right, because this here is a short term, or what should I say, current asset, but in this case it's a liability because we owe the bank. So because this here is a current liability, this here will fall under what you call a bank overdraft. The bank overdraft basically is like you owe the bank money, but it's for a short period of time. It does not equal to a loan. So it's a short period of time, and usually with high interest rates, so that you will pay the bank back quickly. So the best answer here would be bank overdraft. Let me go through the others though. Transactions were omitted from the debit side. Okay, it's that there is probable, but we're looking at the most likely reason. Anyway, some figures were overstated on the credit side. Once again, that there is possible, but that is not the most likely reason. And the last one, the incorrect transactions were entered on the credit side. So this question here, all of these answers could be correct, but only one answer is the best answer, and the best answer is A. Alright, moving on to 2. In the statement of financial position, this is what you know as the balance sheet. Expenses owing will be listed as, so expenses usually go in the income statement or statement of profit and loss. But in this case, we're talking about expenses owing. It means that you owe somebody money, right? And expenses are things you're supposed to pay during a short period of time. So expenses owing is going to be a liability, and because it's supposed to be paid shortly, like say for instance electricity or water or telephone, for a short period of time you have to get these things paid out. So this here will be a current liability. 3. Maharaj bought 2 cases of expired mushrooms from B&B supermarket and returned them. In Maharaj's books, this will be recorded as a journal entry for, so let's take this transaction back. So this person by the name of Maharaj, we're looking at this transaction from his perspective. He bought goods, so he made a purchase, right? But obviously, what did he do? He returned them. So this here is going to be a purchase return. However, if we are looking at this question from B&B perspective, then it would have been a sales return. But since we are looking at the question from Maharaj's perspective, it's a purchase return. So let's move on to question 4. Ishani's cafeteria does not keep a complete set of accounting records. The bookkeeper has provided the following information. Cash sales, opening accounts receivable, credit sales, cash received from accounts receivable. Okay. What is the balance on the sales ledger control account? So remember, this control account, it's an impersonal account, meaning it does not keep people's name in the account. It just have totals. But what we have here, and another thing is, it just record credit transactions, just credit transactions. Therefore, we will have, let's see, we have accounts receivable will be on the debit side, so we have 700, and we'll ignore the force because it's not a credit transaction that should be there. The next item we have there is credit sales, and there is $1,000. This is also going to be on the debit side in the control account. And the last item we have there is money being paid, and money paid means that the asset is being the asset, as in the receivable amount, is going to be decreased. So when asset decrease, in this sense, we are going to be crediting it. However, in terms of money, the money will be increasing, and that will be debited, but we are not concerned about that. We are only concerned with the sales ledger control account in this aspect. So you have to minus 1250, and from this our answer is 1700 minus 250, so 1250, sorry, so 700, 450, and the answer here is going to be 450. Okay, let me just complete this. 450. Okay, it's supposed to be a dollar sign, but anyway. Accounting is a process of, let's go through this. So these questions are kind of interesting because if you have one of the options incorrectly, you will more than likely get a question wrong. It's a process of gathering and recording information. Okay, good. Providing information which influences decisions, definitely. Interpreting and reporting financial information, that is an aspect of accounting. And therefore we have 1, 2, 3. That has brought us to 1/3 of this discussion. Which of the following actions should a company take if it's likely to incur bad debt? So this here is what you call prudent concept. Prudent concept basically means you are catering for any hiccups that may occur, right? So what they do in these cases, they would prefer to assume that they'll be bearing a loss, so they'll be catering for that loss. So let's see. Yeah, bad debt means you're expecting people not to pay back the money for whatever reasons. Provide for such loss, I just said that. Well, let's see the other options. Accrue for bad debts. That doesn't even make sense. Anyway, become a separate entity. How? Okay, once again, this does not make sense. I am thinking they're just putting different accounting concepts here to confuse students. Anyway, match gains against revenues. Okay, nice plain words. Match gains is here is what we call matching concept, and this here is matching revenue to the expenses spent, and this does not apply here. So the best answer is A. 7. Which of the following will be shown in the appropriation account of a limited liability company? So definitely we have transfer to reserves and director's remuneration. This here will go in the what do you call it again, statement of profit and loss or income statement, because this here is a company expense, right? So you don't have to apportion any sum of money for this. And the last one here is retained earnings. Definitely we have retained earnings for the year, then we have retained earnings brought forward, retained earnings that are also carried forward. So the answer is B, 1 and 3. Merrill Industries operates on a 40-hour work shift. Overtime is paid a time and a half. Time and a half. Employees are paid $50 an hour. What is the gross pay for an employee who worked 49-hour work shift? Alright, so let's see. The basic is basically 40 times 40 hours, that is 159 units times $50. So this is going to give us 0020 $2,000. So the basic pay is $2,000 and the overtime is 9 hours. 9 hours times 1.5 because that's the overtime, and times the rate per hour, and this is going to give us, let me check this separately, 9 times 1.5 times 50, $675. 75. So add these up and you will have 2675, and the answer is D. Okay, they asked for the entire gross pay. So that's good for now. Let's go to the top here. A trader has opening capital of 900. Opening capital. Okay. Let me get my text. If his drawings were $900 and his closing capital is 4860, what is his net profit? Okay, good question. So opening capital is 900, and you have to minus the drawing, you have to add the profit, and then you have the closing capital. So you have this minus 900 plus x representing the profit, equal 4,000. Okay, I did not use a symbol, I will not use it for anything. 4860. So alright, if we minus this here, we're gonna get 3,000 plus x. So 3,000 plus what will give you 4860. 3,000 plus 1860 will give you 4860. I guess I'm right. Answer is here. Which of the following items is a capital expenditure? So basically we have two main types of expenditure. We have capital expenditure, we have revenue expenditure. Capital expenditure means you spend money in acquiring a new acquiring non-current asset, and all of the transportation costs and the settlement costs and whatever for that new asset, new non-current asset, that is right, long term. And there's that. And two, if you're making major improvements on a non-current asset, then that there will also be included in capital expenditure. Revenue, on the other hand, is basically short-term expenditures, and these here will be should I say expense? They will be expense in the income statement. On the other hand, capital expenditures will be recorded in the balance sheet or the statement of financial position, and will be depreciated over a long period of time, provided that it is not land. So here we have payment of wages. This here is something that's a short-term expense, right? You have to pay people once they're working, and when the last one whatever come in here, you're gonna get into a problem if you don't pay your employees. Payment for repairs. Repairs is also revenue, short-term. Purchase of goods, short-term. Purchase of machinery. Machinery is non-current asset, unless of course they're selling machinery and they did not give us that piece of information, so you assume it's non-current asset. Number 10. A business received $5,000 from rent revenue and deposit this amount in its bank account. How will this transaction be recorded? So let's go through this back quickly. A business receives $5,000 for rent revenue. They receive this money, right? And they put it in the bank. So how do we record? So the bank is increasing. Bank is an asset. Like we mentioned earlier, when assets increase, we debit them. When they decrease, we credit them. So we have to debit the bank, and therefore, remember double entry, we have to get the debit transaction and we have to get the credit transaction. Or debit and credit entry. So which means that rent revenue will have to be credited. But before doing that, you need to know that rent revenue is an income, right? So it's an income, so therefore income, once you make an income, you credit it, right? So just for recap, we have assets, we have expenses, we have purchase. These items here, once we have an increase in them, we debit them. And if we have an increase in capital, an increase in income, an increase in liabilities, we credit those, right? So we debit an increase in asset, expenses, and purchase, and we credit any increase in um, income, capital, liabilities. So like I said here, debit bank and credit this one, and we have this here. All right, so we have like 4 questions more. Kekan, debtor of AB Enterprises, settled his debt of $120, 2.5% discount by check. So he paid by check. How should the double entry be recorded in AB's in the books of AB Enterprises? Okay, so this transaction here, we have to look at it from AB's perspective. So it means that AB receivable, Kekan paid his debt, right? So it means that AB receivables are decreasing. When assets decrease, we credit him, right? So we have to credit Kekan, and AB also give Kekan a discount. This here is a discount allowed, right? So AB Enterprises allowed a discount to Kekan of 2.5%, which is equal to $3. So expenses, discount allowed is an expense, and expenses, like we just mentioned, they are debited. So we debit Kekan, we credit Kekan of Kekan 120. We debit the expense, and we are also debiting the bank, right? Because AB Enterprises, they receive money in the bank account. So let's look at the option debit bank, debit discount allowed, and credit Kekan. That's it. For some reason, I misinterpreted something just now. Partnerships are formed for the purpose of combining capital from different persons. Yes, definitely, more people, more money. Okay, in terms of account, that is. Benefiting from different skills and specialization. Definitely, right? If you have more people, you will more than likely have different skill sets in a business. And lastly, we have sharing ideas and experiences and responsibilities. Right? This goes right back to the above. More people means you're gonna get more experiences in the partnership, right? More people, they come with their own ideas and their own experiences, and also, more people, you can share your task with them and get assistance. So best option is the control accounts are kept in order to assist management in. Alright, and this here is very simple. This here is that. So we have the entire control system made up of the trial balance, the reconciliation statement, and also control account, and their main purpose is to locate errors. Increase profit, definitely not. Um, in limited drawings, how? This none of these three doesn't don't apply to the question. And we have here the last question that we'll be looking at today, and as you can hear, my voice has already gone. Anyway, item 15 refer to the following information. Closing inventory. Okay, let's see the question itself. What is the value of opening stock? Alright, so first of all, we're gonna put in our formula, and they give you cost of goods sold equal opening inventory, which we don't have, right? Stock is inventory, that by the way. Opening inventory plus purchase minus closing inventory. This here is a basic formula. However, at some point, you may have other things like carriage inwards here, carriage inwards, and you may also have purchase return. Okay, I have to step down this thing here. Let me bring down this part. Come here. And close, where was I here? Okay, so purchase return. So let me see what we have here. Cost of goods sold is 5,500. I'm not going to write the units, right? Equal open inventory, which we don't know, so put an X, plus purchase is $5,000, carriage inwards is 500, purchase return is $1,000, and do we have closing inventory? We do, minus $1,000. So we have 5,500 minus 2,000, so that's going to be 3,500. 5,500 minus, equal X plus 3,000, 3,500. So we carry over this, we have 5,500 minus 3,500, and this is going to give us $2,000. So if we were to put back the $2,000 in the equation, so we have $2,000 plus $5,000, as in to substitute back the answer that you have here into the question to ensure that your answer is correct, plus carriage inwards of 500 minus closing inventory of 1,000 minus purchase return of 1,000, and I have 5,500. So there's that for today. And what you have here is a bonus question 16. Feel free to work and share your answer in the comment. I'll be sure to upload the next session soon, so until then, stay safe. Let me put the answer. The answer for this is B. Am I getting, okay, it's B.